the markets are taking a little bit of a beating today, or took, because we are already 30 minutes after the closing bell. All right, so I'm gonna share with you in this video exactly what is happening and what is causing all major indexes in the US to fall pretty sharp. So first of all, we have two things, all right? We have two things to look at. The first thing is actually what triggered this whole sell-off, because I believe this was something that was in the pipe, in the making, just looking at the levels of the Dow Jones and the S&P 500 especially, but also looking at the Nasdaq, but just a couple of days before the new year started, all right? So we have to look at that, and we also have to look at, hey, what was supposed to happen is now happening, or people are realizing that it's happening. And I do believe there might be also a little bit of as always, an overreaction to this. But let's get into the details. Let's talk about the first thing that triggered this market sell-off. As you can see here on Market Watch, Dow Industrials turned south as minutes imply Fed could tighten financial conditions sooner and faster in 2022. So here's the thing. Couple of days ago, not a couple of days, a couple of months ago. So that was weeks ago, December. On December, the Fed chair, Mr. Jerome Powell, said that, hey, look, we are going to start reducing the amount of money that we are putting as stimulus into the economy. That money that they started injecting into the economy to support the economy when COVID hit back in 2020. So their balance sheet, meaning when you look at the assets and their liabilities, anytime they print that money, it goes into their books. All right. So their books have now grown almost to 9 trillion. That is $9,000 billion. And half of it is just the money that was printed, that money that was put into the US economy just less than 2 years ago. Okay, that is the stimulus money. So in December, Jerome Powell said, hey, this is what we're going to do. And back then, market was like going also crazy, but it was also kind of an overreaction. And right after he started speaking, the market eased off, and then we saw the center rally beginning. All right. So now that the minutes have been released, because whenever they speak, when they speak and meet, it's being transcribed live. But the meetings, I think it's 1 month or 4 weeks later, are now disclosed, and people are actually getting a closer look, because after the meeting, there are also some discussions internally within the different Fed, regional directors. And based on those later discussions after the meeting, they are now thinking that, hey, some of them are now in agreement, because back then they were not a lot of people in agreement. It was kind of half and half. We have one half thinking it's too soon to increase the interest rates and reduce the stimulus money because Omicron is still there, Delta is still here, so we're not sure yet. Remember that the main goal and the main job of the Fed, the central bank, as a central bank, is to make sure we have full employment. Full employment means we have as much people working for US companies. That's the number one goal. And the number two goal, the number two job of the Federal Reserve as a central bank is to make sure inflation doesn't go out of control, because if it does, then that's a problem. All right. Now that they are releasing the minutes, and we don't have that 50%, we more have, more people in agreement that, hey, now the US economy, even though Omicron, it's still spreading a lot, it feels like, numbers coming from the job market are way better than they were a year ago, which makes sense because more people are going back to the job market. More people are going back to work because the stimulus money is now ended. All right. So because we have that, and because the earnings, the potential growth of the economy is still growing in 2022, is still very strong. And because of that, they think that now we need to accelerate. We need to do it faster and sooner than we actually anticipated. And that's actually what is kind of putting people on crank. So that's the one reason that is actually triggering the markets to sell off. But I told you that this was kind of, in the making, because when you look at the levels of the major indexes, let's look at the Dow Jones, for example. The Dow Jones lost 1% today. It was the least affected, all right? Because when you look here, up here, you can see that the S&P was almost lost 2%, Nasdaq 3.3%, Russell 3.3%, and the VIX, which is the fear index, it's way up there with almost 17% on the high. So if you look on the last 5 years, on this year, let's look at this year. The Dow Jones just hit new all-time high yesterday. I mean, even this morning, the Dow Jones hit new all-time high, all right? Kind of recovering from the late sell-off, and this started December 20. That was the Santa rally, all right? And if you look also the Nasdaq this year, after the Santa rally started in December 2020, boom, we were close to all-time high as well. And then it's going to be the same thing for the S&P 500 if you look up to it, So last year, boom, and we can see that, before the Santa rally, after the Santa rally, boom, 5%. All right. So the markets were already at all-time high, and markets work in cycles. They work in seasons, if you will, all right, in patterns. Once they're up, once they're down, they go up and they go down, they go up and they go down. So they were supposed to go down. It was just a matter of time. That's why I say the news around the Fed tightening financial conditions sooner and faster in 2022 was just the triggering effect. So what to do based on this? Does that mean necessarily that's going to have a crash coming? I don't think so, because this is not new news. We already knew that the Fed was supposed to do what are now in the minutes. The only maybe difference is the fact that it's going to be sooner. But hey, market already crashed when they heard about the word inflation being transitory and interest rates increasing. So when interest rate increase, you naturally you're going to have some parts of the market, not all of them, but some parts of the market be more affected than others, especially the tech sectors, because those are what we call growth company. That's why the Nasdaq today was one of the main losers among the other indexes. So what do you need to do if you own stocks? Well, first of all, remember that when everything as a reaction that this happens, the market will always tend to throw the bathwater with the baby in it, even though those stocks are quality stocks, are stocks with good news, all right? I believe that 2022 is going to be a year of the cyclicals, all right? And based on that, if you own one of these cyclicals or financials, then maybe, then you will be right. Now, if you own some tech stocks on that, and you will see that today, some of those got really beaten down, the Teslas, the Palantirs, the Neo, the Lucid, the Amazon, etc., then it might be time to maybe trigger your, trim your positions on those, because high interest rates and cheap money not being there anymore means bad news for the growth sector. That's why people are freaking out. And I wouldn't be surprised if tomorrow we see this sell-off continue, but that's what I will do, if I had stocks in one of these sectors. That's going to be it for this video, folks.